There is nothing that makes me believe why the Philippines should not keep growing at 6% in the medium run. Uday Tharar, Goldfish Capital. The Philippines is an economy that has seen significant expansion in recent years. Despite the elections having a positive reaction on the currency and the Philippine Stock Exchange, what are the current challenges facing the Philippines at present?
Philippines has one of the best macro in Asia and emerging markets, and that has been the case for a few years now. However, Philippines still relies heavily on domestic consumption to drive its GDP growth, and the manufacturing growth has somewhat lagged a bit. Manufacturing as a percentage of GDP still remains one of the lowest in Asia. Remittances and the BPO industry together roughly account for 20% of Philippines' GDP, making it vulnerable to a global slowdown. So infrastructure spending needs to further increase in Philippines, and the government needs to provide more incentives to private players to set up manufacturing units within Philippines. So the only concern coming from Philippines right now is maybe the manufacturing industry needs to grow faster than it is right now.
Foreign direct investment has quadrupled in the Philippines in recent years. What are foreign investors' opinions on the new Prime Minister? Are there concerns on how he will impact the economy?
As I said earlier, Philippines has one of the best macro in the region. Philippines will continue to follow similar economic policies with maybe minor changes to enhance the manufacturing sector and more infra spending. From my recent visits to Philippines and interaction with foreign investors, I do not see a major concern coming from the change in leadership.
In the short to medium term, some economists are stating that the fundamentals are strong enough for the Philippine economy to grow at a pace of 5 to 6%. Is this realistic, or is it too soon to assess the status of the economy?
Philippines has one of the lowest inflation in the region. It has a current account surplus. The government deficit and debt levels are pretty low. It has got a credible central bank. Policy rates remain low, and it has one of the lowest cost of borrowing in emerging markets. Recently, global rating agencies have upgraded its sovereign ratings on the back of these factors. Domestic consumption will continue to remain strong, with strong growth in the construction and the BPO industry. So there's nothing that makes me believe why Philippines should not actually keep growing at around 6% per year in the medium run.
This month we have seen factory orders surprise on the upside. The currency is on a rally following the election outcome. Can we expect the Philippine peso to continue this rally, despite Philippines exports posting the fastest drop in 6 months today?
The current rally is due to the clear election mandate and the strong Philippines fundamentals. Data releases should continue to come out good in Philippines. However, Philippines is not completely immune to emerging markets or the China contagion. This kind of rally will be kind of short-lived and depend more on global factors and the incremental data coming out of Philippines.
Well, Uday, thank you for your insight. That's all from me today, but as always, the Dugascopy TV team provides you with all the latest market moves, so be sure to check back.